Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Bain Capital Specialty Finance, and let me tell you, it's not just another boring document. There's a potential money-raising strategy here that could either boost the company or signal some interesting times ahead. Stick around to find out what's really going on. So, the document we're looking at is called an 8K, and it's basically a snapshot of important events that a company wants its investors to know about. This one is dated February 27, 2025, which means we're getting some pretty fresh information. First, let's talk about who's involved. Bain Capital Specialty Finance, or BCSF, is the main player here. They're a company that provides money to other companies, usually in the form of loans, especially to those that might not easily get funding from traditional banks. The main event, BCSF has entered into what's called equity distribution agreements with Raymond James and Associates, Inc., and Keefe, Bruyette and Woods, Inc. Think of these as partnerships with firms that will help BCSF sell shares of its stock. They're teaming up to potentially sell up to $250 million worth of their common stock. Now, why is a company like BCSF suddenly interested in selling a whole bunch of stock? Well, it could be for a few reasons. Maybe they see opportunities to invest in new ventures and need more cash on hand. Or perhaps they want to strengthen their financial position, like paying down debt or simply having a bigger safety net. It's important to note that actually selling these shares depends on a lot of things. Market conditions play a huge role. If the stock market isn't doing so great, or if BCSF's stock price isn't attractive, they might hold off on selling. Their decisions depend on the climate and price of the market to get the best deal. This stock sale is happening under what's called a prospectus supplement. This document provides details about the offering and is linked to a broader registration statement that BCSF filed with the Securities and Exchange Commission, or SEC, back in July 2022. This registration statement is a big file that companies make available for public viewing. The way BCSF plans to sell these shares is also interesting. They might sell them directly on the New York Stock Exchange, which is like putting them on the open market for anyone to buy. Or they could sell them in what are called negotiated transactions, where they make deals directly with buyers. They can also sell them on what's called an at-the-market basis, as defined under something called Rule 415 of the Securities Act. This just means they'll sell shares at whatever the current market price is. Of course, the firms helping BCSF sell these shares aren't doing it for free. The sales agents will get a commission for every share they sell, up to 1.5% of the price. Think of it as a finder's fee for connecting BCSF with investors. These agreements aren't just simple contracts. They come with a bunch of standard clauses to protect everyone involved. BCSF makes promises about the accuracy of their financial information, and there are rules about who's responsible if something goes wrong. For those of you who like to dig into the details, you can find the full equity distribution agreement as an exhibit to this report. It's all public information. There's also a legal opinion included from a law firm called Dechert LLP. They're basically saying that, as far as they can tell, BCSF is legally allowed to sell these shares. It's like getting a thumbs up from the lawyers. Finally, the report is signed off by Michael Ewald, the Chief Executive Officer of BCSF, as of March 3, 2025. This confirms that the company stands behind the information in the report. So what's the big picture here? BCSF is looking to raise a significant amount of money by selling shares of its stock. The success depends heavily on market conditions, their current stock price, and overall investor confidence. They're using established sales agents to help distribute the shares. It could be a way for BCSF to fuel future investments, pay down debt, or create more financial stability. Now, let's talk about what this all means. BCSF is in the business of lending to other companies. Their profitability depends on a lot of things. One thing is how well the companies they lend to are doing, and the other is how well the economy is doing, because that affects the health of the companies. On the other hand, raising more capital could also suggest that they anticipate some turbulence ahead, which could be because some of their loans aren't performing as well as expected. It is important to know what's coming. So is this good or bad? That's a tricky question. It really depends on how BCSF plans to use the money. If they can find good lending opportunities that generate strong returns, it could be a smart move. If they're just trying to patch up holes in their balance sheet, it could be a sign of deeper problems. The fact that they're selling shares at the market is not a great sign. The goal would be to sell the shares in private for a premium. This is a subtle bad sign. The risk is that market conditions could change and BCSF might not be able to sell all the shares they want at a price they like. Also, issuing new shares dilutes the ownership of existing shareholders, which could make them unhappy. It's a balancing act. In conclusion, this move by BCSF is definitely something to keep an eye on. It could be a strategic maneuver to capitalize on opportunities, or it could be a signal of underlying challenges. Only time will tell, and the company's future reports and actions will give us a clearer picture. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, don't forget to like, comment, and subscribe for more insights into the world of corporate filings and financial news. Let us know in the comments what company we should decode next.